Yo, what's up guys? Welcome back to This Just In. Thank you for joining me today. In this video, we're going to take a quick look at two different semiconductor companies that I think are looking really nice right now. With the big shortage in chips and semiconductors, I think these stocks can give us some nice exposure to that and help us get some really nice gains. So let's not waste any time. Let's jump right in. Alright guys, before we get started today, subscribe to the channel. Hit that bell notification so you can stay up to date. I try to post new videos every day with growth stocks, penny stocks, value stocks, news, anything I think can help us grow our portfolios, become better investors. There's a link down in the description to my Patreon account. Come join the family over there. I'm doing the first 100 patrons for just $1. That is the day one squad. I wanted to provide as much value and take care of my day one subscribers as much as I could. The $1 was the lowest they would let me do it for on Patreon. There's about 70 spots left, so it is filling up pretty quick. But when you come over, you'll get access to the private Discord. That's where we talk stocks. You'll get links to 4 different portfolios so you can see exactly what I invest into. And then anytime I buy or sell a stock, anytime I enter a swing trade or a crypto trade, I send that out so you can follow along and see exactly what I'm doing. I'm also finishing the channel today in the Discord that's going to have all of our plays with short-term and long-term price targets. And then I'm eventually going to add a grading system so we can upgrade them, downgrade them as time goes on. So if you want to follow along with that, if you want to be a part of the family, the day one squad, and help me grow the channel, come over and join us. We would love to have you. It's an amazing community. I love the people over there. I do want to say thank you so much to my current patrons and subscribers. I love you more than you could ever understand. Growing the channel with you guys, seeing people subscribe and comment, it's amazing. And I just want to explain to you how much it means. I love you guys. Thank you so much. But let's not waste any time, guys. Let's jump in. I know I get long-winded sometimes. So the first stock we're going to take a look at today is Alpha and Omega Semiconductors. This is the ticker symbol AOSL. I really like this stock. Looking very, very good. I do not own it as of right now. I am going to be adding it to my high growth portfolio, pretty soon, depending on how it looks. Now, let's talk revenue real quick, then we'll look at the chart. I'll give you my price target. So as of right now, they did $383 million in 2017, $421 million in 2018, $450 million in 2019, $464 million in 2020. In their trailing 12 months, they've done $539 million, and they're projected to finish the year of 2021 at $630 million. So nice, consistent growth there. Nothing like boom, boom, like, doubling, tripling, but I like to see the consistency, just doot, 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 doot. In 2022, they're projected to do $666.5 million, and then just under $700 million at $698.4 million in 2023. So again, consistent growth. Their gross profit was $91.8 million in 2017. Then $111.9 million in 2018, $115 million in 2019. Then it fell to $102.7 million in 2020, with their trailing 12 months being $142 million. So they did recover that and get that back up. Now their net income is a little different story. They did $13.8 million in 2017. They did $14.3 million in 2018. Then they only did $1.9 million in 2019. And then they lost negative $6.6 million in 2020. But their trailing 12 months is currently sitting at $15.9 million. So looking very nice there. Now, if we take a look at the chart here, these guys build semiconductors. Semiconductors are very important for defense, all these different technologies, the EV industry, solar, all those types of things. If you see here, ever since back in like November of last year, in 2020, they just started, boom, big gap up right here, and then just all the way up since then. Came all the way up, reached just under 30 bucks, sold off, ran up. You can see how it's kind of using the 20-day as a little bit of a support line, and then just blew right through it, and the 50-day moving average on this big correction. You can see here, runs up, boom, right here, gaps all the way up to, $40, breaks through the 40, sells off, and then boom, gaps up again to open at 37, gaps up again to open at 40, and then comes all the way up and touches a high of $43, gaps down, and then has been selling off. Has tried to come back up a few times, but got rejected and got pushed back down. In my opinion, the stock is a little extended. It is trading at a pretty high multiple, but I do believe that a lot of it is the market sentiment recently. I think that we are in a market time right now where everything was so extended. Ever since October, November, we have just seen growth stocks go boom, blow up so much. And it's like people didn't even care what valuation they were paying. It's like they were willing to pay anything for growth. And I think that we are going to see the market kind of shed some of those layers and kind of come back down to reality, if you want me to be honest. I do think the S&P 500, and the NASDAQ will finish up on the year. I do think that they will end up, 5 to 10% higher, than they did at the start of the year. But with that being said, I do think that a lot of these growth stocks that are trading at ridiculous multiples will come down a little bit, and fundamentals and valuations will be a little bit more important and will stick out a little bit more. I think this big market correction was a very nice reality check for a lot of, retail investors that were seeing these big, massive gains the last few months and just thinking that anything they buy is going to go up. I think it's a nice, humbling, reminder that, taking on those risks, there is some downside, but you can get nice gains if you pick the right stock. So I do think the market's going to go up, but I also think that it's not going to go up as ridiculously fast and explosive as it did the last few months. Now, if you see here, the stock, like I said, 43 came down and is currently sitting at $32.28. Not quite sure what it's at in in after hours, but this right around here at $32 nonetheless. You can see here, like I've said 1,000 times, these support or gaps act as nice support and resistance lines. So you can see here it acted as resistance a couple of times, acted as some support right there. So typically, it breaks through a resistance line, it'll start using it as support. It used it as support right here. So we'll want to see what happens. It might get rejected right here at the 50-day moving average. I'm not quite sure. Who knows how far it's going to, or how long it's going to take to get back up to previous highs. I think depending on how the market sentiment goes, we'll kind of decipher if it starts moving its way back up towards the upside like quickly, or if it's going to take a little while. They do have earnings coming up on the 21st of May. I do think that they are going to have nice earnings there. I think that they will, have positive earnings, as far as what analysts say. I don't think that they're going to surprise in a negative way. So that could be a catalyst to help push the stock up as well. Now, my price target on the stock is currently sitting at $44 to $45. If you take a look at back when the stock was trading around the $37, $38 mark, it was trading around 1.7 times sales. If you look at the 2022 sales of 666,000 or million, and you put the stock price around $44 to $45, that gives you about a 1.7 times multiple. So I think that that's pretty fair. And I think that by the end of the year, by the end of 2021, you should see the stock up around $38, $39, $40. It could go higher than that, but I think my price target 100% is middle 2022. It'll be up around the 44 to 45, if not early 2022. So, keep a watch on this stock. I think it's got great fundamentals. I think it's in an industry that is going to explode. The semiconductor industry is, getting hit right now with a big shortage, which plays a role in a lot of different other industries that are growth industries like the EV industry. So I like to get stocks like this that give us exposure to that. Demand goes up for semiconductors, good for these guys. So that's the first one I wanted to show you. The second one I want to show you is more of a riskier penny stock type company. Now, I always try to give you guys one kind of more safer value type stock that's got, really good fundamentals, is less risk. And then I want to give you one that's a little bit more risky, because if you're anything like me, I don't mind taking some risks like that if everything checks out and it goes through my process and it looks good to me, which this one did. So this is I'm not sure how they pronounce it, EMAN or whatever. The ticker symbol is EMAN, so it's EMAN. Now, this is their website, okay? I wanted to show you a couple of things on here. So they do a lot of stuff when it comes to products. They do the micro displays, which is huge for augmented reality, virtual reality, the face displays or whatever they call them. Couple of really cool things here. So they did just come out, I don't know, I can't remember, a few months back or a couple weeks back with a new patent that protects their intellectual property related to their bright OLED full color micro display. The display brightness in this industry is massive. Key success point. They have to have, whoever has the brightest display is going to be, the top dog. Now, their direct competitor, EMAN or however you pronounce it, their direct competitor is Kopin. They just reported massive Q4 earnings. I picked this one because I saw something the other day that said sometimes the most obvious stock is not always the best stock or the worst stock. Sometimes it's the worst one. Kopin has phenomenal fundamentals. The stock looks great. The company looks great. They do very similar things to these guys. I wanted to do these ones, guys, because I like the outlook, and I think that these guys have a key advantage on some of their products. They're a US-based company, literally like the only US-based option on this level. And I think that they've got some potential catalysts that could catapult this stock. So if we take a look here, this is kind of their timeline. You can go check that out. But right here, this was their patent. So their patent that they just applied for. Oh, and by the way, they've got 83 total patents with 44 that are issued and 39 that are pending. So this right here, this typical OLED displays, excuse me, are the white OLEDs. They've got the the color down here, and then their new one is a directly partnered OLED micro display without color filter. So I don't know, I'm not an expert in it. I don't know the technicals, but apparently that color filter, the RGB color filter, locks up like 80% of the light that comes through. And apparently they have the brightest micro display out there. It's like 28,000 nits or something like that. I'll read you something from their Q2 or one of their, not their last transcript, the one before. It says, our newest patent adds to our technological leadership in brilliant full color OLED displays for AR/VR display brightness. Display brightness is critical for both AR and VR devices and for heads-up displays. Used in bright daylight environments, our proprietary DPD technology greatly enhances light output relative to competing products that require color filters with the white OLED, which reduces the light output by approximately 80%. Our roadmap targets full color displays in excess of 28,000 nits brightness by mid-2023, with an intermediate brightness of 10,000 nits later this year. This intermediate target brightness is approximately 20 times brighter than traditional full color OLED micro displays. So with that being said, guys, they have the technology. They are like the leader in this technology right here with the brightest OLED heads-up display. I like that. They've also got real big contracts with the U.S. Defense. If we look here, it says in December, this is their latest earnings report. This was published like a couple days, a week or so ago. But it says here, in December, we signed a long-term lease and increased our manufacturing footprint by more than 25% to accommodate the new equipment and clean room funded by the U.S. Department of Defense. Guys, they also hired additional engineers to improve our technical capabilities and increasing R&D investment in our direct partnering of DPD technology, which in the near term should drive more contract revenue. Our proprietary DPD technology greatly enhances light output relative to competing products that require color filters with white OLED. Okay, guys, this is big. This is big. Like I said, they are one of the biggest in the United States, like the only, as it says right here, we are proud to be the sole U.S. manufacturer of OLED microdisplays. We greatly appreciate the support of the U.S. military in helping us protect our vital U.S. production line. Right here, the U.S. Department of Defense gave them more than $39 million to purchase factory equipment to protect and enhance our ability to manufacture. Guys, that was my big concern, is their manufacturing. They don't have the capability to fill massive orders, which is okay, because if they continue to get support from the U.S. government, which you know that the government's going to back these guys, they need it if they are developing their products. Being the only U.S. company, they need them, so they're going to help them. Like I said, this is where I was reading the 28,000 niche. You guys can go through this. It's really, really cool. Talks about their bookings. So let's see here. They had 8.3 million in bookings, which led to 22% increase in our backlog from the third quarter of 2020. We received significant orders from the night vision, eye care, veterinarian customers. And as of the end of 2020, our total backlog of open orders was 12.2 million. Let's go over some revenue. Guys, I like this stock. If they can handle manufacturing, which I did see something that said that they bought a bunch of new equipment, which will start coming into effect in the beginning of 2021. That's when their revenue will start reflecting that new equipment and that expansion in manufacturing. Because if you look at their revenue, they've been stuck in a channel. So in 2018, they did 26.2 million, 26.7 million in 2019, 29.4 million in 2020, and they're projected to do 32.1 million in full year 2021. Their gross profit was 6.8 million in 2018, 6.7 million in 2019, and 6.4 million in 2020. You can see it's flat. It is stuck in a channel. They have hit a ceiling. Their net was negative 9.5 million in 2018, negative 4.3 million in 2019, and negative 11.4 million in 2020. Guys, this stock right here is a risky play, because if they can't break through that ceiling and get their manufacturing up, no big company or no big partner is going to fill an order with them if they can't fulfill it with quality and efficient and fast products. If their manufacturing does work and they can break the ceiling, I think this stock will do very, very well. If we take a look at the chart here, as you can see, ever since back in like middle to end of December, they have just been popping off, growing like crazy. They started in the end of December at like $1.15. And then boom, just this huge runs all the way up to reach a high of $5.42. Was just kind of riding this 20-day and then broke right through it and broke through the 50-day. You can kind of see here, looks like they might find some support right there at the $2.93 range, maybe a little bit more. Let's see, right there probably. So around the $3 mark. The stock's currently sitting at $3.44. Okay, Coppin, their competitor, just released massive earnings for their last quarter. These guys are going to be expected to do the same. They've got earnings coming up on May 21st. I think with the insane growth in the micro display OLED industry, these guys have a lot to benefit. I think with them being the sole U.S. company, they've got a lot to benefit. Again, this is going to be a more risky play. I would like to see the stock come down even a little bit further from where it's at currently, because it's up there. It's up there. I would like to see it down here around the $2 mark, honestly, but I don't know if it'll get there. I would watch it. I don't own this stock either. This is a risky stock. I'm thinking about adding it to my penny stock portfolio, because if it gets back up to, the previous high area, you're almost doubling, your stock entry price. Now, I do think that over the course of time, 2 years out, if they get manufacturing down, if they get their production up, if they continuously, release their products of the 28,000 nits and they continue to have the brightest technology, they will do very, very well. I could see this stock being a $10 stock all day long, double-digit stock all day long in the next 2 to 3 years, depending on how everything goes. Again, this is a risky play. They've got to do everything right. If they miss earnings, if they don't improve manufacturing, they're going to get destroyed. I could also see them being a potential for a partnership or a licensing deal for manufacturing. That is what I think would send them up, much higher. Like if they, partnered with Apple and did a licensing deal for Apple to manufacture for them or whatever, I think it'll help them a lot. So guys, put this on your watch list. Go check it out. Do some research on it. It is a risky play. I might add it to the penny stock portfolio. I really like the semiconductor aspect. I like the US aspect. I think that they're in that channel of revenue and they're either going to go one way or the other. And I don't think it's going to go down. I think it's going to go up. And as soon as they break through that channel, I think this stock will continue to go. It'll continue to run like it was running if everything goes well. So there's a lot riding on, if it goes well. So you got to have that in mind if you decide to make an entry in this stock. It's not a stock like Alpha Omega where it's probably going to be pretty consistent and not be so risky. This stock is either going to go up or down. It's either going to return down to this level of $1.20 and you're going to lose more than half your money, or it's going to go up all the way, to previous highs and beyond if they can break the ceiling. So that's it for today, guys. If you've got a price target on it, put it in the comments. I'd love to hear it. If you have any questions, put it down there as well. If you've got any ticker symbols you want me to cover, please, let me know as well. There's a ton of semiconductor companies out there. I just liked these two. I think they have a lot of room. Now, come join us at the Patreon. I love you guys so much. Thank you for watching me. This video is for entertainment purposes only. I am not a licensed stockbroker. Always do your own research and due diligence. And I'll see you guys in the next one. Peace.